To kick off today before we jump in with our panel to give a little update on where we're at with our first cohort, which some of our startups are here with us today. Really, we're now 4 weeks in, and as all you know, it's our first cohort, and there was sure to be some fun learnings as we went along. But really, I think we have a solid next couple months set up. We're looking at mid-October being our wrap-up week for the cohort. But more importantly, in the shorter term, Julia will definitely want to loop you in on this as well. Here in Miami, we're looking to make a Miami Climate Week happening in September 20th to 26th. So we're working on some events there that we'll be sure to invite people to. So that's a little preview of what's to come. But I really want to jump in today, bringing together both Julia Wilkinson from Imvest and Rodney Morris from Magnus, not just for Valor Ventures. I know we'll get that cleared up. But to me, both of you guys represent both, I think, some of the emerging interest in the blue tech space and then in the climate impact space. And I think it's really cool they bring diverse perspectives to the table of not just people who are industry focused, but really people who see the opportunity from other lenses and can help bring more people in, because at the end of the day, it's a global issue and we need as many people in this space as possible to drive forward the solutions we need. I look at the community, right, an ecosystem for environmental and for ocean solutions as being this team for both investors and the people and entrepreneurs driving the solutions on the same team, and not really one pitching the other, and that we're all in it together. So all that being said, elaborate introduction over. I'd love to throw it to you guys. Rodney, would you like to start introducing yourself?
Yes, good evening, everyone. Thank you so much for having me. Thank you so much, Daniel, for setting this up. Also to Julia, thank you for being here as well. My name is Rodney Morris. I'm the founder of Magnus, an investment and talent advisory firm with ventures in sports, technology investing, of course, in media entertainment.
Awesome. Thanks, Rodney. Julia?
Thank you. Thanks for having me. Nice to meet you, Rodney, as well, and all of the cohort and guests. I am the CEO and founder of Imvest. We focus on accelerating both impact investors, which could be family office, a foundation, a fund, on how to integrate impact into their strategies, and also accelerate early stage companies by angel investing, advising, and helping some startups grow that have both an impact value proposition and a financial market rate return, in this case, driven proposition. So very excited to hear about all of you and learn about your exciting and important work.
Awesome. Thank you, Julia. Well, I first off want to just tell the quick story on Rodney, because I think we had a fun fun initial meeting. We met during Miami Tech Week, and we were, I think, in the middle of Riverside, which is a bar here on the river. And basically, I'm like yelling over other people pitching him BlueTech, which he'd never heard of before. And and I could just see the light bulb go off, and it was just so cool to me, right? When I'm like trying to bring, up to that point, I've been really focused on just bringing together a community of entrepreneurs to get into this space, where I'm like, this same value prop, or really the same really resources and knowledge empowerment that we focus on for entrepreneurs works the same for the investor community, right? We're all just trying to figure out what's the opportunity. And so that was really where I saw this kind of golden opportunity that we were sitting on, where we can bring people into the space from both sides, not just one side. And so that's really, to me, what I'd love to drill into with you guys deeper today, as far as just how we all can bring people into the field, bring investors into the field, and really collectively drive the solutions we need forward. So with that, I'm going to go to our first question, and Julia, I'll throw it back to you to start. What does impact investing mean to you, and how do you see that encompassing environmental solutions?
Okay, great. So impact investing to me means intentionally investing towards quality outcomes that are either environmental or social or both, as well as a financial return. And when I say quality, I mean that you're still targeting. There's a fair amount of evidence-based strategies now that you could measure against and say you're targeting a certain impact target and a financial one. So just like you're trying to outperform the benchmark in finance, you should be trying to outperform your quality impact. So that's how I like to define it. I'm happy to talk about ESG as well if you want.
Yeah, go for it.
Okay, cool. So like the way I differentiate that from ESG is that ESG is less about intentionality towards an outcome, like climate. We want to reduce climate CO2 emissions by X amount. It's more about risk management across certain areas or opportunity management, let's say. So that could be like an environmental, social, or governance metric, like you're managing for diversity and inclusion at the firm level, but it's not necessarily that you've committed your entire firm to its value proposition to be reduced inequalities and are measuring towards it. So there's just a slight difference about the intentionality towards the goal versus risk management, but they're both very important concepts, and happy to go into more detail if that's helpful.
I love that word intentionality, because I think that's really a core piece of this. And what I love to hit on is for people getting in this space, being passionate about what they do as well. Of, really, as an engineer, I love to say it doesn't mean anything to me unless it's tangible, right? And same goes for the intentionality of actually executing on, what people are not only investing in, but really executing on vision. So just love that point. Rodney, the third to you, same question.
Yeah, I think Julia did a very, very great job of explaining it. Definitely the social economic piece, and tying that together with whether that's environment, the climate, or whether other impact metrics that you have, but also tying that back into the financial returns piece. Lately, especially in the VC world, they've been trying to make diversity investing a part of the impact investment space, which I disagree with. But that's been something as well that they're throwing in there. And so, I think it's just being intentional about the change, whether it's platforms that change a certain industry, a socioeconomic factor, and tying that into the financial returns.
Yeah, that's a great point too. I think it's funny how many things people try to loop under the ESG banner, and I think it actually again gets back to the same point about being intentional. And I think when we talk about how we actually derive value and demonstrate value, right, it can't just be something that is just a figure that you include based on just distributing investment. It actually has to be real results and real impact. So Rodney, I'll throw it back to you for the next question. How has BlueTech and ClimateTech become a sector that you've considered investing in? Are there specific opportunities that appeal to you? And feel free to reference our story if you'd like.
Yeah, absolutely. I could touch on the story that I had with Daniel. I think he did a good job of providing some context. I think being in the venture space and being an investor, you want to be opportunistic about rising trends and anything that's kind of going on. I thought we saw this climate tech type of interest, maybe a little bit over a decade ago, but there was like this bubble. But one of the things that I've noticed, and which kind of trends that I'm following, is most likely when solutions are being solved, it's going to most likely be from smart entrepreneurs that are venture backed and funded. If you look at some statistics now, most of our economy is almost driven by technology companies that have gone public. So just being able to draw on that, I was super interested in climate tech, just following all the news that's going on, all these different funds that's being raised. And I see where the capital is moving, kind of what some of the sort of the deals are going. And also there's this factor of, we're actually doing good in the environment. So I'm an investor who has this thesis of, we invest in a lot of platforms that change consumers' lives, and then we invest in platforms that make businesses better and more efficient. So, when I met Daniel and God, this guy's great. as I'm speaking with him, and he's telling me about what he has going on and how he's building his own incubator and having his first cohort that's specifically focused on BlueTech and also climate tech. I'm like, wow, that's amazing. Like, how do you even start? Like, where did you even begin to even like get to the point where you're going to get there? And the conversation just went from there. I'm asking a lot of questions on the BlueTech side because I want to understand more and understand, why is that needed? And, I'm definitely no expert there, but just being able to ask people like Daniel about that and just be more informed and also be on a panel like this is great for me. And, my interest was more intrigued by talking with him. And like I said, the trends I was following as well.
Thank you, Rodney. And I think I just love to hit on that accessibility point as well, where it's just when I and you heard my spiel on this, but my experience in the BlueTech space is it's been so exclusionary to not only people looking to get into the minimal opportunities to make real impact, but really to the outside world, right? And making people aware of what the opportunity is. And it's a lose-lose for the planet and for the people who want to make a difference. And so it's crazy that just making this information and opportunity accessible is that radical, but here we are. So all that being said, Julia, I'll throw it to you now. How has BlueTech and ClimateTech become a sector that you've considered investing in, and what opportunities are appealing to you?
Well, I came at it from a slightly different approach, which was I grew up living in Latin America, and my mom worked on the environment in Brazil as a kid on Amazon sustainability for the State Department, the U.S. State Department. So she came at it from a government perspective, but back then they were starting to promote with DFIs like USAID or KfW or European Investment Bank, like money towards sustainable supply chains in the Amazon. Like, how do we create economies that could thrive from the Amazon without cutting them down, or without agriculture, which is not good in that region, as well as destroying the Amazon, our biggest carbon sink. So that got me started to think about that more as a philanthropy or quasi-philanthropy concept. And then I grew up and found that maybe public policy was too difficult to maneuver in and change, but I always had climate kind of at the heart, where one of the things that like we talk about, if you look at the UN Sustainable Development Goals, for example, which have like 17 global goals, maybe all of you are familiar with them, but of those 17 global goals, almost none are possible if the climate isn't addressed, right? Like, we can't have peace if we can't have resources to survive, and if we're in like, we don't have shelter because of climate changes, and we're having mass migration, like, so we can't have reduced inequalities without all these other things addressed. So I consider it like the very basis of all of our ability to build a sustainable economy going forward. So like, not only right now, I think we're just starting to see people pricing in the cost of climate change into businesses, like operating businesses today. Like, if they don't take action, they too will suffer in the long run, because they depend on these complex supply chains that are disrupted by, environmental events or pandemics or whatever. I mean, I think the pandemic reminded us of how like a global incident of that level could disrupt everything that we know. And people awoke a little bit, I think, last year to realizing that there's an urgency about it, like that that maybe we were just too busy to remember, I don't know. And the pandemic reminded us. But so without digressing, I'd say that like, I think of it as like fundamental to all future economic success. So part of me just wants to bet on it for like our humanity to succeed, even if it wasn't an economic opportunity. However, I think what's made it more attractive over the years is like a lot of money has already, I mean, there's a lot to go, but a lot of money has gone into renewable energy becoming more affordable, like solar panels being scalable, like, AI has changed the way we manage energy at the building level. Like, there are still industries that are really behind, like real estate construction, but like we're seeing discussions about how do we innovate there as well. Then e-mobility, right? Like, it used to be way too expensive and complex to build an electric car and manage that. So that's shifting, right? We see Ford talking about it. It's going to be cheaper to buy electric cars. The president is aggressively promoting that. Then we see like waste management, alternative meats are getting more affordable too. So all those industries were like really expensive to build. So I think now we have this opportunity at the more venture level to take risk that used to be quasi-governmental or whatever. And I think that's exciting. And that gives us hope. And there's a bunch of capital moving there that wasn't before from the private sector, which is also means like that's less risk for all of us putting in the original risk capital. So that's exciting to see, companies exiting, making, Tesla, and well, whether or not you think Tesla's perfect, now they're in the S&P 500. So these are things that like give the startup hope of exit and the market like a lot more hopeful confidence that they'll also make money. So I don't know, that's a long way to say that's why I got interested in this space, and all of those spaces I mentioned do interest me, like energy, waste, alternative meats, and BlueTech, which I'd love to after the discussion learn more about what you guys are doing. But yeah, that's how.
Awesome. Well, thank you. And I think, this is a great segue to current events. Hopefully those of you guys over here heard about the IPCC report that came out this week. And if you haven't, if you want to read the full report, I just linked that there. But basically, I haven't yet, in full disclosure, but I've gotten my cliff notes. Bottom line, the no surprise to all of us who've been following global warming, and climate change that, basically we're now officially past the point where we can reverse some of the changes that human impact has created. But I think it's also really now created this even more, hopefully, bigger push for ESG impact, right? And I really, I say hope, right? Because that's that's where we're at this point, right? But I do think, that we're seeing hopefully that become more of an impact for mainstream investors. And so, Rodney, I'll throw it back to you. How do you see more mainstream or industry agnostic investors moving toward impact slash ESG investing?
Yeah, absolutely. I think we're seeing it at a rate that we probably haven't seen before, currently in the last few months. I think just because it's a combination of, I think, us defining impact investing, but also that financial returns part, from the investor standpoint. They could click two buckets at one time. We're seeing like a lot of investments that are impact related actually drive great returns, and so I think it's this whole ideal of we could be investors and invest in great platforms. We could also do some good in the world, right? I think we're seeing that, especially with the pandemic, is driving a lot of eyes to different things and kind of the problems that we have, and it's drawing a lot of investors to the space, from our perspective and personal conversations, and it's been great.
And I think it's just the fact that it is part of these now normal conversations that actually makes people start to think about this more too, because so many people don't want to discuss the science or think. And I think this is also part of the perspective. And Julie, I'm curious to hear your thoughts on this too, where it may be where finally we're not just a reactive society where we're investing reactively to, for example, oh, there's a pandemic, invest in Moderna or Pfizer, right? But instead, oh, there's a looming end of the world situation and we can actually get ahead of it and be proactive. So Julia, with that fun preface, same question for you.
So yeah, like Rodney was saying, I see also like a lot of discussion on ESG that used to be kind of fringe, or maybe even like a manager was doing it in some way, but wasn't even marketing it that way just because it wasn't so popular. And I think in countries that I like, for example, like I said, I worked on Brazil or LATAM, like LATAM was really behind. And in some ways, suddenly, I don't know if it's a mixture of many things, like they were actually punished by European pension funds for some of their environmental activities in Brazil. Like there was actually like kind of like a boycott, let's call it, of certain products. The youth were kind of rebelling against their family offices. Like we want to make a difference and have impact. So you saw, and there was like more press, right? Like I think the press has made it not just during COVID, but like even the past 5 or 6 years, like the press is all over you if you have a scandal about slave labor in another country or an oil spill. And it used to be like harder, more opaque to see those things. So I think that like also expedited ESG over the past few years. But yeah, like now it's like $1 in $3 invested is a screen for ESG out of like 44 trillion or something, which used to be 1 in 4 like a year ago or something. So that's a big upswing. Impact investing though, a little bit behind. I mean, it's still growing very rapidly, but like it's, I think, only $750 billion out of 44 trillion under management or something like that, or maybe it's even 50 trillion now. So it's like very small still. That's like what we're talking about, like where it's very intentional, very much measured and managed, like as if it was part of the absolute purpose of the investment. And so we still have work to do there, but like some, I think it's a stepping stone, right? First ESG, and then that becomes commonplace. Everybody gets it. Like asset managers can understand it, and like traditional investors get it now. So, and then it kind of like becomes more like better data, more information, probably more regulation forcing it too. So I think it's like only going to grow to deeper impact from ESG. But like young people don't think ESG is enough. So I think that movement is going to keep pushing it. Like I was teaching some 20-year-olds at Watson Institute, and they just think ESG is just far too, like it's like you said, picking between Pfizer and Novartis or Coca-Cola and Pepsi. You're not like changing the world in their mind. In all of, well, I agree in some ways, but it's a shift of mentality as well that I think is continuing to happen. So the new generation of investors, like all of you guys and us, are really pushing for it.
Well, and I think that's a great segue to our next question, which I'll throw back at you, Julia, because you hinted at it, which is what should startups do to best position themselves in impact and ESG?
Um, so that's a great question. For I was going to say the ESG side, I would pick a couple of indicators that you're measuring towards in each. Well, first of all, milestones and policies that you have behind it. Like, for example, we want to be efficient on managing CO2, water, and energy in our supply chain. And then say like, and you can make big goals like in 5 years, we want to have reduced these things by a certain level. And then you start kind of measuring and working backwards from that. In the social, it could be, again, because ESG is more focused on sort of target goals, you can have a policy around how diverse and inclusive your team and board is, how you include customers and stakeholders, your maternity policy even. So these things are things that are tangible in the short term. Governance is like you have an independent board, a diverse board, your performance is aligned with the performance of the company. So you need to be like linked to the long-term performance, and compensation is not completely insane. So I don't know, those are just examples that you could easily bake into your startup today and start thinking about. And they've gone from nice to have to probably necessary already. Like you can't IPO a company without a woman on the board anymore, or a person of color, or LGBTQ. I think you have to have one or two. I mean, it's still weird that it's like a quota system, right? We should just have a diverse board, but at least it means you have to have these things in place before you get to IPO. It's not like just a nice to have. Not to mention it actually drives return. Like most studies show that diverse boards actually outperform the market by significant alpha, like 3 or 4%. So it's pretty interesting. Sorry, so those are a few things. Like if you're going to go on the impact side beyond ESG, then you're probably setting like a theory of change. Like what is the theory behind how I'm going to change the world with this business? And like, what is the long-term goal? Like I want to reduce poverty by 10% in Miami-Dade. And then like everything I do is measured towards that along with your ESG goals. I should say that ESG should be like a layer anyway. And then impact is like a goal beyond it and something you're measuring towards and shifting your business model if you're not achieving it, even if it means your profits could be temporarily in question.
Yeah. And I'd love to also just give a little context for those who may be wondering a little bit about measuring indicators, right? So for Seaworthy, for example, right? So our big things are inclusion, interdisciplinarity, and accessibility, right? And so for example, for accessibility of the opportunity, right, we have our opportunities for sea change, right? And so we can measure how many people have applied, right? And so we know we reached over 150 people who applied, right? Or inclusion is actually seeing who joined us for these calls and keeping a log of how many people attended our calls, right? So these are ways that we can actually measure, right? We know that we are literally disseminating this much knowledge to this much size of an audience. So just to kind of put some context for you guys as you start to think about that. Rodney, I'm going to throw the same question back to you, which is what should startups do to best position themselves in impact and ESG?
Yeah, I think Julia did a very, very great job talking about metrics. I guess I'll talk about the other side of it as far as like operating as a business and connecting to investors. Definitely want to follow your goals and have something that you could shoot towards and stay on that path towards. I think as far as like on the investment and business building side, just being intentional about connecting to the right people. I think especially when you're in that space, I think it's necessary to connect to investors that actually care about the space, and also having people on your team that really have a mission and a passion for the space that you're in and what you're doing as well. The team is going to be largely important, but also connecting to investors that are not going to waste your time, so you can continue to build a business and grow towards your ultimate goal of achieving your success. So I talk to a lot of founders. You could target every investor in the world, or you can make a list of investors specifically focused on what you're doing and targeting those. So I think those are a couple of little standpoints there.
Well, and I think one of the key things that I've learned too, and I love just demystifying the investor relationship piece, right? So much of this isn't just like finding investors that are in the space that you want to be in, but also like actually building relationships and realizing that people align with what you want to do, right? Like we have investors who come to us at Seaworthy, but they're specifically why, I chose this panel, because I know these people really align with what we're going for, right? And it's really this, to me, and we say theory of change, or whatever you want to call it, where, it's truly people that align on vision and not just impact. I think it really is two different things where, there's of course the end goal, but how you get there, and knowing that you guys are on the same journey together because you're partners, right? That's what investors are, is business partners, and treating them like that and understanding that that's something that you're moving forward together and they're holding you accountable, right? So it's a really important thing to have that foresight. Julia, I saw you on mute. If you wanted, I don't know if you wanted to say anything else to add to that.
Oh yeah, well, I was just gonna say I really love what Rodney was saying about the team and the passion and that commitment being so necessary. And I think it's sometimes a hard space with like these emerging technologies in the climate space. You have to knock a lot of doors and explain yourself many ways that maybe aren't like purely about impact too, because to the flip side of the story, like maybe you're measuring a lot of things but people don't understand, or you're at very high impact and that's not, it's not as sellable. So I think, like Rodney was saying, like know your audience, kind of pick the right investors and also understand what they're looking for. Like, and maybe you can retell the story a little bit like that, and you're still managing this as an impact, a social enterprise. But sometimes you don't need to tell your investor that you're thinking purely as social enterprise, because people don't necessarily know what that means, or maybe they are shy away from impact because it might suggest lower returns, even though that's not really true in the market. But like that's kind of the changing, but kind of set in stone assumption that somehow it's like philanthropy. So I say, while I'm super about metrics, like sometimes, like Rodney was pointing to other KPIs and other things that you guys need to really put front and center. That's also a piece of advice from experience.
Well, thank you. We have 2 more questions before we get to Q&A. So I saw we had 1 question already in the chat. Keep those questions coming. We'll ask you to unmute to ask your questions when we get at the end here, guys. So with that, Julia, I will throw it back to you. What ways has the Miami tech movement brought attention to the impact and ESG space? And is there anything specifically attracting your focus here in Miami?
Yeah, I think what I've always thought was cool about the Miami ecosystem when I moved back here in 2017 and was getting involved is that there was a certain level of like a lot of women, a lot of people, diverse people were founders. There's a lot of immigrants here. So it was sort of like a different vibe than I felt like in New York or in Silicon Valley, where certain things are already very set in stone. Or some people kind of say about us, like we're still growing up and figuring out who we are, which means like there's a chance to shape it. Like everything's not so institutional. So in some ways that's already kind of a cool background. And I think when like a lot of people were moving here, there was a little bit of fear, like, is that going to be diluted or is that going to be challenged? And so that some of the community wrote a manifesto about like what they wanted Miami tech to look like. And I think something that, while it's not called impact, or maybe the people who wrote it didn't even think about that as impact investing, like I thought it was powerful because it really focused on mentioning that purpose, inclusion, and diversity were important to like the stakeholders and to advancing that. And purpose really is kind of like what we're talking about, like some kind of deep purpose that is driving you to build this business. That may be climate, it may be reduced inequalities or whatever, healthy communities. But it's something that you're passionate about. So I think that's one thing that's bringing maybe what we don't call ESG, but like purpose-driven entrepreneurship front and center. Then I think you asked me, there's also like more risk capital entering, like I said earlier. So I think that gives the opportunity for more types of entrepreneurship. Like before, the community was just trying to get any startup to succeed. And like it wasn't as focused on deep knowledge in each sector and like getting deep on a specific vertical. So now we're seeing more like opportunities and more people confident in taking bets here. So that's awesome. And that I think allows for more focus too on a certain things like the environment, mobility, whatever it may be. Talent is coming here more. So that's also great. And we're getting more like passionate people who are very bright. And I think that's awesome because it's Miami, like maybe not when I've been here, but like 15 years ago, a lot of people just left, like they never came back. There was not like the sense of pride in the city. So I think that's also exciting and hopefully transforms into more and more impact. And on the what areas am I excited about? Mobility tech. I think is like kind of has a lot of potential here. It already has like some stakeholders that have played big roles, like Ford autonomous vehicles, which right now are electric, but will one day, I'm sorry, right now are gas powered, because they said it's just too much AI for an electric vehicle to manage today. Like the battery doesn't have enough power, but that will be electric. Bolt, the scooter company is electric. I invested and accelerated an EV charging startup called OB Power, which is EV infrastructure. We're seeing like cool ed tech companies like Nearpod, which is, I think, has a strong impact story exiting. And so I'm excited about ed tech. I also invested in a virtual reality company in Miami that's focused on ed tech. And I think there's potential for sustainable ag, which hasn't like taken off here, but there's a lot of, it's just agriculture here and a lot of money going into ag tech. And clean shipping, which I think relates kind of to some of you maybe. We got like 3 cruise companies here who are kind of taking a hit this year, but they're potentially, buyers of some of the products in the BlueTech space. And I know Royal Caribbean's made some big commitments with World Health Organization around, certified supply, MSC certified ship fish, like cleaning, all the pieces of the ship that clean the water on waste as you exit, for example. But I won't go too much into that, except that, if you guys are interested as startups, we can talk about that more later. So those are my interests right now.
Julia. Rodney, same question for you.
Yeah, absolutely. I would say what attracted me to the Miami space as far as the ESG and impact side. I guess I definitely have to give Daniel all the credit there with Seaworthy, just being able to track the success on LinkedIn and taking it from the idea stage to where we are now. It's been amazing to see. So that was my first entrance there. Yeah, congratulations on everything too. The second part of the question, I think Miami is vibrant right now for a few different reasons. As far as the technology scene goes, Julia mentioned a few, whether it's great talent. I've met some great people that are very, very smart and doing different things in different industries, which is great to see. And all this talent that is migrating from these traditional hubs, whether it's Silicon Valley, whether it's New York or Boston, and coming to Miami just to be a part of that vibrant community. Some great founders that are building great businesses in different industries, whether that's crypto has been huge in Miami, and software has been huge, and fintech and all these other different industries. And it's just great to see. A lot of capital is coming into the city. A lot of funds are going there. And even traditional old guards like Goldman Sachs is moving the office down to Miami, which was like non-existent before. But that's just a testament to I think where things are moving and how it's moving. So as far as like what I'm interested in Miami, definitely crypto. So that's why I was there in Miami when I met Daniel. So crypto for sure. Personally invested into some crypto founders down there. So yeah.
And I think what's going to be really interesting, I don't know if Nicholas is on with us, but he's one of our startups in seaweed, and he has some ideas for crypto with seaweed. But I think
we'd love to hear that.
Yeah, right. It's really cool. Is I think there's this convergence of technologies where everything isn't going to continue to be in its own lane, right? There's going to be so much overlap between, I think, what's going on between crypto, for example, and BlueTech, but also even mobility and cruise lines, stuff like that, right? I really think there's this, especially for the ocean space, and I think I've already said this, right? It's been so siloed for so long, and I think we're finally getting to this point where blue tech is becoming a term here finally. And so when people think about applications, it's not just, I like to say, terrestrially biased, right? That we can actually focus on thinking about ways that we can implement this on the water. So and we need to, considering our waters need all the help they can get. So I'm going to get to our last question, and Rodney, I'll throw it back to you to start. But please, guys, if you have any last questions, make sure to get them in the chat before we jump to Q&A. But the last question I have for you, Rodney, is what advice do you have for current and aspiring blue tech entrepreneurs looking to drive impact in the space?
Yeah, I think it'll be a culmination of a few things, that we've already discussed today. So I'll put it all into one big sentence or a few sentences. Yeah, I would say be resourceful. I think the Miami community right now is very collaborative, much more so than other cities. I witnessed that firsthand. So be resourceful, network a lot, and talk to people about what you're doing, and get the word out there as much as possible. And on that front, connect with people that will be able to drive your business along. Whether that's an investment side, as Daniel said, your investors are your partners. They're going to be next to you, by your side, and building that business alongside of you. Being strategic is whether that's introductions to customers, whether that's introductions to other investors, or introductions to possible contracts. Be resilient. You got to have that grit and that passion to be able to build a business, and continue to scale it and grow it, and also be able to build a business that's going to be resourceful. So I would just say a combination of those three things, you should be able to win. It's going to be hard, but on the other side of hard is that glory. So just keep going.
Awesome. Julia?
Wow, that was good advice. I think, yeah, resilience for sure. I think on the resourcefulness, becoming good at researching funds, at creating the relationships, like Daniel said, but like, I think I've gotten really deep into Crunchbase to the point that, but like, that's been a great tool. I guess like these tools that are opening up channels are also really helpful, since like, even though Miami's changing, there's still not a ton of capital in every direction. So I think like, people like Daniel are making a huge difference in building the conversation, but, reach out further than you might want, further than the city, further than even the country. Europe has a lot of capital going to these things. So be creative and resourceful, I think is great advice. And stay committed and passionate, and hopefully we can achieve these big goals, which are so important.
And I love the piece you said about being like resourceful and not being afraid to reach out, because I think that's definitely how I got to where I was in my career before starting Seaworthy. Like I had a lot, even before getting into entrepreneurship, there's just so many barriers to even getting into the space for BlueTech in the first place, and all of that was hardcore networking. Feel you there. So great advice all around. Thank you all. So with that, we're going to move to our questions. So I saw Shreesh, you had a question in the chat, and guys, feel free to keep chiming in with those questions. But Shreesh, if you'd like to unmute and ask your question, go for it. There you go.
Yeah, I think it's, yeah. So this Shreesh, so I had a question on, kind of feasibility of BlueTech, really speaking. So, the timelines on BlueTech are much longer than most other startups, right? Software, IT, even, the chip industry, etc. So, so how do you as investors look at these kind of investments, right? It's not going to be like 6 months and you're going to be out in the market. You're going to be maybe a year or two or more than that, right? So that's my question.
Well, I think I certainly, kind of like I was mentioning about renewable energy, there's like a lot of R&D still happening, I assume, in your space. So it's like more expensive and hard. So maybe some of the partners that come to mind for me are like corporate venture that have some kind of, I'm imagining some part of a supply chain of like, I don't know, like a bollard for a ship, because I tend to know more about cruise ships than some other things, but like that is a potentially, not as venture fundable as like a, blockchain sustainability tracking platform or something like that. But I've seen more activity in like the corporate venture space, where they're taking early stage equity investments, maybe not quite as early as some of you, I don't know what stage, but like, let's say Series A, and they're kind of help you grow because they want to eventually use your product or resell it in some way. So I think Daniel and I were chatting in the chat another day about like that Florida actually has a fair amount of like this kind of industrial manufacturing giants like Siemens and I forget, Mitsubishi and others have a presence in the state that maybe like needs to be better tapped into and leveraged for potentially some of your industries, because I don't know them all. But then also, I guess, unfortunately, also, trying to secure grant money as a risk capital if there is opportunities in your space. Unfortunately, I know that's not like a huge pool of money, but that's one area that I would look to. Oh, and in infrastructure. I think Daniel and I mentioned this for one of your cohort, like infrastructure investors tend to think more like long-term 15-year horizon, more of a yield asset than like a venture asset where they expect like a 10x. So it depends on what you're doing, but if you're like changing infrastructure for shipping or infrastructure for any kind of maritime activity, maybe you're looking for a different type of investor than a VC. That's just one idea. But I don't know, it may be hard to be specific at this moment without your concept in mind, but hopefully that helps a little bit.
Yeah.
Yeah. I'm gonna speak to another side of it. I would just say that connect with the many investors as you can that are knowledgeable about your industry, and then also investors that are interested in learning about your industry from you. I would say that because if you're an investor and you're investing in GovTech, for example, you know that there's very long sales cycles. So it takes a long time for these startups to get up and going. Or if you're investing in marketplaces, you know that they need a lot of capital. So Uber took 12 years and Airbnb like took the same amount of time. So as long as you're in talking to investors that either know about your industry or want to learn about your industry and do their own research and learn from you, then they'll be able to look at it from the lens of even though this is taking longer, we're in the ride with this. We're in the ride with you all the way through.
Okay. Yeah. Thanks.
Thanks, Trish. And actually, I can even add to that too. I'm curious actually just to get your guys' thoughts. I would say in the last couple of months learned the term deep tech, right? Where I think for a lot of these technologies that especially need to actually be implemented, it's going to take years of R&D, right? And a lot of investors don't have that tolerance to wait or take the risk of it paying off. So I think that's also kind of an emerging thing. And I know one investor that has gone in or is going to be in our network that's in specifically that space. But I'm curious if just that's something that you guys are also looking at all or have heard about.
Yeah, I'm familiar with deep tech. Something that we've been looking into. So yeah, I would just say just the R&D side of it. A lot more capital than usual. You just have to be under that understanding. Not to say that there are going to be great businesses that are being built from an investor standpoint. You got to be able to understand the different settings of the business to be able to be a valuable partner to the entrepreneur and also understand when a good opportunity comes by or when a bad one comes by as well. So
yeah,
which I don't know if I'm the right person for that right now, but
all good.
But yeah, definitely looking into the space.
And I think we're talking about like deep tech, like, I don't know, quantum computers or something like this.
I mean, I think it has I love to say there's like so many umbrellas, right? Like BlueTech's under ClimateTech, which is under Green Tech, and then there's Deep Tech, right? So it's a lot of different ways, but yeah, it includes that for sure.
Yeah, well, I guess the only thing I would add to what Ronnie said is like sometimes again quasi-governments are investing in that. So I don't know, not that defense might be a customer of yours, it may not, like, but defense spending is huge on that type of R&D. So they're even investing in like co-investing, I believe, in quantum computing with like the CIA and Amazon, all our favorite impact investors. But interestingly enough, because they're government size checks, like they can do a lot of R&D in that space. And I guess maybe around the Biden plan, I don't know Biden's infrastructure plan. And I haven't been following if they have anything on the oceans. Maybe Daniel, you've seen it, but like there is going to be a lot of money through climate, which is maybe too much for some of our stages on this call, but like in the midterm could be really awesome, cheap capital for you guys.
Well, I think speaking of forms of money, Leah had a great question. Leah, would you like to unmute and ask your question?
Thank you. How do you see crypto and carbon merging, specifically in logistics and supply chains, carbon counting, and impact investment?
Say that one more time. Sorry, I couldn't hear it. The carbon capture. Not carbon
Sorry.
capture.
Yeah. So how do you see crypto and carbon merging? I like specifically for logistic and supply chains, carbon counting, and impact investment.
I'll take a stab at that first, I guess.
I can help too if you want.
I'm thinking there's some blockchain applications. I would guess. I mean, I've read a little bit on the logistics side. I'm not so familiar, but I mean, I could see some applications there. But like, for example, managing sustainable, yeah, like if you're looking at a whole supply chain from sourcing cotton to producing it to like selling it to distributing it and wanting to trace like every step of the way and meeting sustainability targets. I think there is activity there. I don't know how if there's any unicorns yet in that kind of measurement space, but it's definitely happening. Also for things like, wait, did you say carbon logistics? I'm sure there's applications. Maybe Daniel knows more than I do on that. Okay, go ahead.
And yeah, don't worry, I didn't tell these guys to study up on this stuff beforehand. So, you know, basically, in this actually, we have a couple collaborators working on this stuff. Climate Futures locally here to Miami is already doing a lot of work in smart contracts for leveraging blockchain for carbon-free smart contracts. But I do think basically when I look at it mechanistically as a mechanical engineer, and I'm like, if we boil down what crypto is, right? It is a accessibility tool, right? It's making the ability to trade things like carbon credits accessible to everyone, not just governments or big corporates, right? And so basically carbon credits, which I think is probably one of the biggest economies that is emerging, especially in the ocean space, right? Being able to get those incentives, right, accessibly or decentralized, if you will, that's to me the biggest role that crypto has to play. At the same time, I don't think that's the only thing. I think, you know, also plastic is a form of carbon, right? It's made from oil. And I think that's also going to be a quote unquote carbon credit as well. If we're going to actually incentivize cleaning plastic out of the ocean, it's a very hard thing to pay for boat time and, you know, trying to get a fraction of what plastic is already worth, which is pennies. So, you know, I do think that essentially my big take is this, that crypto is basically going to be the tool to replace subsidies because the government isn't moving fast enough to actually solve these problems.
Thank you.
No problem. Yeah. Yeah, Rodney, I don't know if you had anything to add. I don't expect you to. But...
Yeah, I think you covered it. I don't have anything there.
Well, I have a question. I haven't followed this carefully, but I know that like creating Bitcoin or creating crypto takes a lot of energy, right? So there's some dispute on like the environmental impact. I assume that's going to get more efficient as like, I don't know, quantum computer. I don't know. Maybe I'm wrong that eventually they'll be more efficient at that cycle. But any ideas on Daniel, maybe on is that like improving or how do we mitigate that risk?
So mitigating the risk of what? Sorry.
Of like crypto takes a lot of energy to generate.
Yeah. No. So I mean, think about it, right? That's just basically just depending on current infrastructure, right? Which is primarily now based on oil and gas. So if we move to clean energy, it resolves that problem. So crypto being a major, you know, carbon emitter or whatever is a short-term problem. Assuming you get to clean energy. So go ahead.
I was just gonna say the last question was like on impact investing in blockchain, and I think that would be a similar like kind of decentralizes with, you know, for example, measurement. It kind of makes it more transparent, like how it happened. I mean, assuming it all occurs through the ledger.
I think we have time for one or two more questions. Julia, would you like to unmute and ask your question?
Yes, sure. Thank you so much, Julia and Rodney, for the amazing conversation. I just have a question about like how both of you feel about how we communicate the ideas and the startups we are building to the investors. Like, how do you feel is the best way to share the idea for them to actually believe in it and invest in the startup?
Yeah, I would say I think storytelling is very, very important. And being able to understand, you know, why are you building the business? What you know, I always ask the question of like, what was that idea that made you want to start this business? Because as investors, I think the thing that we want to understand is that you're the right person to build the business, but also that you have the right domain expertise or the right industry expertise to build the business, and that you're passionate about it. So I know the second part of your question is how do you communicate the positivity, or what is the power of that when speaking to investors? I would say it's very important, because investors want to be able to sense the energy and passion that you're building the business, not someone that's low on energy and stuff like that. And especially over Zoom, since you're not having conversations in person anymore, I think energy and positivity is just so important. It's different when you can meet with your investor 3 or 4 times a week, pre-pandemic, and you're actually building that relationship and they're getting to know you so much more. I think the landscape has changed so much now. If you're just having 2 Zoom calls and, and that's it, in those calls, you have to be able to appeal to so many different things. So I think storytelling is very, very important. Just be able to catch someone's attention from a different angle.
I think that's really good advice. And yeah, the Zoom energy, that is it's hard to maintain or not receive if you're on the other side. But let's see. I think if you're doing something that has a lot of impact, that it's not immediately monetizable, kind of like also spelling out like the big picture, where is this industry headed? And because maybe the person you're talking to is not as familiar to the topic. And then like the cost, without going, without becoming dire, but like the cost to society of inaction, maybe like this costs taxpayers millions of dollars if we don't deal with it. Or, maybe that's not, it depends on your audience, right? How much they're concerned with these other externalities. But sometimes we just don't realize it, right? How impactful something could be, both economically and otherwise. And so finding like a way to kind of KPI that in a way that's palatable is good. What else?
I can add a little bit too. I really think, and getting back to the storytelling point, because I literally logged how many Zoom calls I've had over the last year. It's over 500 in a year. Yeah, that's what it took to get here. So, but I think, and that actually gets to the point though of, we don't realize it, but Zoom is still a form of, not only connection, but entertainment. And I think at the end of the day, if you're going to be on an hour-long Zoom call, if you're here till the end of this panel, hopefully you're entertained, right? And you're not just like torturing yourself sitting through this. And that's because I think, especially with this challenging, format, that we have to find ways to, enliven the conversation. And, even though, yes, it's a professional setting and I'm wearing a suit, at the same time, I'm still cracking jokes, because that's what's important to keep people engaged. And people don't realize that we need to be more human through Zoom to keep it relatively human, I guess. So that's one of the key things that I really emphasize, but there's definitely a balance, and don't come to me for advice on the balance of humor to things, because I'm definitely a little off kilter. But overall, that's just my biggest take on at least the Zoom pitch side for sure. Did you have anything else you wanted to add, Julia, before we wrap up?
I guess the presentation, visual, informational, not overwhelming, even though it's always hard, especially if you're trying to like explain complicated things. But that's the only other advice.
Oh, actually, I had my team totally told me that my older version of my pitch deck totally looked like an engineer made it, which was right. But it's gotten pretty. So, well, with that, I think we've had an awesome conversation today. I really, really appreciate both of your insights. I think everyone learned a ton, and I know I'm just eager to really, introduce you guys to our startups, which will have you guys hang out. But before we wrap up, please make sure you submit the form if you you haven't submitted. There's a form for a survey if you're attending. Not you guys, but those who attend, those in the audience. If you can fill out the form to get your feedback, we'd really appreciate it. And then otherwise, we have some exciting events coming up that we haven't debuted yet, but we will be soon, where we'll be featuring some of our startups. We're working, as I mentioned, toward announcing a climate week. So this is the first mention that I've made of that, but we'll be getting that officially out there in the next week or so. And then looking forward to even October, having a full slate of events as we chart out the end of our cohort. So thank you all for coming today.